Hello and welcome to BTTV. What is happening in Dogecoin? What is driving the price of this meme coin? How is it different from a Bitcoin and other cryptocurrencies? Should you participate in what seems like an unstoppable rally, or is it a bubble? We have with us Mr. Vikram Rangala, Chief Marketing Officer, ZebPay, to answer all such questions and much more.
Dogecoin is a crypto token that was created as a kind of experiment, a sort of humorous, lighthearted experiment several years ago. The people who invented it just wanted to create a token on the blockchain, partly to demonstrate that there's an abstract idea that any kind of money, any kind of form of value that we have is really driven by the amount of value that you and I and the other people in the market decide it has. So, even our currencies, they only have value because everybody agrees, yes, this piece of paper has value and we can use it safely to exchange it. So they wanted to make this economic point. It was a bit of a joke. It was a bit of performance art, maybe. It was a kind of demonstration of, you know what, money isn't absolute. It's the trust that people have in each other, or the value that they decide to put into something that matters. There's a historical analogy. In Argentina, at one point, the currency was getting devalued. A similar thing happened in Brazil as well. And in both of those, the currency was losing faith so much among the people that the governments sort of took the advice of certain economists. They kind of rebranded the currency, even in one case renamed it, and then put this new currency out with a lot of basically marketing hype to say, this is a new and improved currency. You can use it safely. It doesn't have all the problems of the old one. People started adopting it. People started using it. It brought the economies back from the brink of, some serious financial collapse. And then it became the new currency of the country. In fact, it was just a rename. It was a rebranding, if you will. So when you have things like that in the history of our economic systems, I think the people at Dogecoin, and they've written blog posts about this, they just wanted to demonstrate that, value is what we say it is. And so it was an experiment. It stayed at, just a fraction of a rupee in value for a long time, and then a few rupees in value. And then some people on some Reddit groups started getting interested in it. They even started experimenting with it. It was like play money, a place for people to try different things like, hey, can we drive up the price by a bunch of us strategically buying it at certain points, and so they would drive it up from, 1 cent to 2 cents or half a cent or something like that. Then it just grew from there. In fact, the founders, if you want to call them that, of Dogecoin, they've even sort of distanced themselves from this. They've said openly, we never intended it for it to be taken like this as a serious investment asset. I don't think it's even safe to call it an investment asset. It's more of a phenomenon. It's like an IPO that just went crazy. And so as for what it has as underlying value, it doesn't really. It has a very basic blockchain software that exists only to provide the token. Bitcoin, on the other hand, it has this immutable ledger. It has this, trustless payment system. It has it has a whole lot of innovations backing it. Bitcoin is a token that represents some revolutions in accounting and the store of value and the transfer of value. Dogecoin is kind of a sort of baby copy of what Bitcoin and Ethereum can do. It really can't do anything except sit there and hold value if somebody chooses to put value in it. But a lot of people are saying, hey, that's the same thing the euro does for me. That's the same thing that a stock in a company that I don't know anything about does for me. And it, to their credit, the founders of Dogecoin have a point. A lot of us invest in shares in companies that we don't know anything about. We don't look at the price to earnings ratio. We don't look at their balance sheet. We don't study their products. We just know that, hey, everybody seems to say this stock is going to take off, and somebody on television told me, it's a hot stock or something. So people buy it, and it does go up sometimes. I can't say too much more about Dogecoin because there really isn't too much more to say. That's all it does. It holds value until somebody takes out the value. I guess, with everybody sort of every now and then saying, is Bitcoin a bubble? Dogecoin is a bubble. It's a fantastic bubble. It's amazing to watch, but that's kind of all it is.
The Dogecoin is driving crazy. So what is the price driver basically if we talk about?
When you suddenly have a whole lot of people, it was a very small market, right? It was just hobbyists, these obscure crypto enthusiasts who were keeping this market going. They were talking to each other on Reddit. And then Elon Musk, a very famous and rich man, comes in and starts talking about it half jokingly, but then sees that, hey, I can tweet about it and drive the price up. So he plays with it. I mean, he's doing it partly just because he can, partly because I think my suspicion is he's interested in the economic sort of thought experiment that it represents. But then a whole lot of people are just jumping in. When you have a whole lot of people coming into a very small market and trying to outbid each other, it's almost like if you had a whole lot of people cramming their way into a very small, ordinary dukan and starting to bid on the price of the snacks that are in that dukan. Suddenly you'd have a bag of chips going for 2,000 rupees. It'd be crazy, but that's not too far off from what's happening in Dogecoin. There's a lot of people coming in. It's pure speculation. I don't think they intend to hold on to the Dogecoin to, bequeath it to their grandchildren or anything like that. I think everybody bought it thinking it's going to go up. It seems to be going up. But I would warn people about this. What goes up does come down. Some people are going to inevitably buy at what we later find out is the high of the market. And they will buy at the high and it'll start to drop. And if they're like most traders, including me, I've been a trader for 20 years and I've been caught in this. I've bought it at the high, watched the price drop and thought, okay, let me hold on. It'll probably turn around. It'll come back up. And then it drops a little more and you think, okay, but I've already, I've been committed to this for so long. You don't want to admit you were wrong. You don't want to give up, but then you're losing money. Finally, you end up taking a loss. The price is dropping further. Some people will have the stomach to, take a serious drop in price, a 50% or more drop in price, which Dogecoin could well have. I mean, nobody knows the future, but what goes up does come down. And so people should only trade with risk capital, money that you could freely, throw out the window. That's the money you should put into Dogecoin and nothing that you ever had plans for or needed.
All right. So partially you have answered that what should investors do, but any other recommendation for crypto investors, those who are invested at this point, should they carry on with their Dogecoin investments or should they come out of it?
Nobody knows. And anybody who tells you they know when to get out or when to get into Dogecoin, I would I'll just say this, take their advice with a big grain of salt because no one can predict that future and I'm not going to. But what you can know is it is driven solely by the interest of investors to keep driving the price up. Eventually, they're going to see that they've made so much profit, they want to take the profits. Nobody wants to keep their money in Dogecoin forever. They want to take it out and, I suppose, buy Lamborghinis or whatever people do with their quick, fast crypto earnings. That's the stereotype anyway, when Lambo. But what really people should do is treat that as a fun little side game that they do with money they can afford to lose. But if they seriously want to get into crypto investing, they should buy Bitcoin and Ether. They should do it like an SIP. They should buy 100 rupees a day or 500 rupees a week, whatever is within their budget, and have a long-term plan for just buying and holding it for 10 or 20 years. It seriously should be a long-term plan. You can have short-term plans along with that. But Bitcoin and Ether are fundamental transformations in the global economy. They're not going away. They are not just for trading. Bitcoin is a technology. Ethereum is a technology. It's a technology as powerful as the internet. So if this was 1997 and you thought, you know what, I'll make some quick money off of this email thing, but I bet by 1998 nobody's going to be emailing anymore, you would regret that now. If you had bought, email stocks and Gmail when it was very cheap, you would still be holding it. You'd be, it would be the basis of your wealth. That's the kind of thing that Ethereum and Bitcoin are. So it's not exciting. It's not nearly as fun to watch as Dogecoin, but plain old boring SIP like buying and holding steadily week after week, day after day. That's what people should focus their crypto investing on. That's what people should focus any investing on. But in crypto, Bitcoin and Ethereum are the big ones. They have the value, and it should be approached in a serious way.